morning, everyone. I'm Amir Adnani. I'm the founder and CEO of Uranium Energy Corp, and also founder and chairman of Uranium Royalty Corp. Been in the uranium business for over 20 years. I serve on the board of directors of the World Nuclear Association. And we're just going to go back to back. We're going to do 20 minutes of uranium here. No pause at the 10-minute mark. And I'll just cover the macro at the beginning. It applies to both companies and what's happening out there. We'll go from there. We'll have some fun. And let's get into the big picture. The big picture really has to do with the fact that today, for the first time in decades, we're talking about, I would argue, we've never seen a situation like this before, actually, where the biggest economies in the world are going nuclear. Back in 2007, when we saw the all-time high uranium price, back then $150 per pound, the US wasn't growing. It was only a China-India story in terms of where the growth was coming from. Today, not only China and India are still growing, but we've got the US growing at a pace never seen before, and the demand coming in from the hyperscalers, the biggest and most successful technology companies in history, are committing to nuclear as a way of really meeting their energy demand. So what I'm showing you on this slide is really the fact that we have a global pledge to triple nuclear capacity by 2050. There is a US pledge, which was the executive order that President Trump signed, to quadruple nuclear capacity in the US. And this is on top of an existing fleet of reactors, 438 of them operating globally. Often in the uranium business, we like to talk about what happened in Japan in 2011 with Fukushima. And so over the last decade, we had a bear market in uranium. We had underinvestment in the fuel cycle. And so the supply side of uranium didn't grow at all during that period because mines were being shut down. I really want to draw your attention to the data point there. 69 reactors have been connected to the grid since 2015. So while there was a bear market and while the uranium price wasn't doing much for most of the last decade, the demand side of the equation was in fact growing, and reactors were being built and they were coming online. As we speak, there are 72 reactors under construction and over 400 planned. But it's also this both public acceptance and political acceptance of nuclear energy that is a new development. It used to be that depending on which aisle of the political spectrum you stood on, you would have been for or against nuclear power. No longer. We have bipartisan support for nuclear energy in the US, which is quite rare. And globally, we've seen in the last couple of years a change to European taxonomy to include nuclear energy alongside natural gas. We've seen the developments where the World Bank will now provide financing to build new nuclear reactors. They had a moratorium on that. That's ended. And we're not only seeing these pledges and these developments from countries, but we're seeing it from corporations. Look at some of the logos up there of 16 of the world's largest banks that have committed to financing new reactor build. How we've seen largest energy end users, the big tech companies, as I mentioned, committing their balance sheets to acquiring uranium or nuclear energy or building new ones. And I tell you one thing, if this particular data point doesn't signal the rebirth of nuclear energy, I don't know what does. And it's the deal that Microsoft did with Constellation, September 2024, to restart 3 Mile Island Unit 1. 3 Mile Island, we all know that name. That name is synonymous with a nuclear problem or accident in the US that caused the downturn in the nuclear energy industry. And to see one of the most successful, forward-thinking companies on the planet like Microsoft commit to the restart of 3 Mile Island Unit 1, not only does it demonstrate that nuclear energy is back at center stage, but it shows that its safety, its efficiency, its energy density is being finally recognized for truly what it is. And the supply-demand fundamentals on uranium is all we need to pay attention to. Uranium is a very easy commodity to understand. It only has one end use. It's to be used in a nuclear reactor to generate electricity, and so it's a depleting commodity. We don't use it for jewelry. We don't use it for really that much speculation. It's a depleting commodity. You put it in a reactor, it operates for 12 to 15 months, and you got to put more in again for these reactors to go. And these reactors operate for decades. A new reactor can go on for 80 plus years. And so the supply demand is easy to see. And you can see on this graph, we simply consume more uranium in the world globally than we produce. And that deficit just over the next year is almost 50 million pounds cumulative over the next decade, which is how long it takes to bring new mines online, is at least 10 to 15 years. Over the next 10 to 15 years, the cumulative deficit is 379 to 840 million pounds. These numbers simply mean that even all the projects that are being proposed today to come online for production, if they all came online over the next decade, it still wouldn't be enough to meet the demand and the demand growth that we see out there. Uranium as a commodity makes up less than 5% of the operating cost of a nuclear reactor. And that's really another positive takeaway, because it means that you have price and demand inelasticity. Uranium price can double, triple, quadruple, and it doesn't make a difference to the bottom line of an end user in a meaningful way. Now, I mentioned yesterday, if we were to adjust the uranium price on a gold equivalent basis from 2007, the previous highs of the uranium price was $140 per pound. Today it's about $87 per pound. I would argue the uranium price has no business under $100 a pound. I'm also putting my money where my mouth is. My companies are all 100% unhedged. We don't believe in signing contracts with ceilings in and around these prices. And I would say if we adjust the uranium price of 2007 for what gold has done since then, a pretty good barometer of inflation, the uranium price should be at least $1,000 a pound. Not 140, not 87, but many multiples higher than where it is. And if it gets there, yeah, it'll be a bit uncomfortable if you're an end user or a buyer of uranium that you have to pay so much more, but your reactors will still operate, and you're still getting premium prices from hyperscalers and the energy markets for the electricity you generate. So the whole thing hangs together. I look at silver prices where they are, I look at gold prices where they are, all-time highs. Uranium price has no business being at 50% of its all-time highs. That's not adjusted for inflation. So it's got an incredible amount of headroom, and that's why I think you really got to pay attention to it. Trump, during his Davos speech, couldn't say more bullish things about nuclear energy. This administration and the previous one with Biden, again, the bipartisan support, have committed $80 billion to build large reactors in the US, $25 billion to SMR, small modular reactors, designating uranium as a critical mineral, establishing a US uranium reserve to stockpile uranium for the government account. But to really benefit from these dynamics, where the world's biggest economy is going nuclear, to really benefit from that, you really have to be capable of delivering US production. US assets, US productions will carry a premium and are carrying a premium because they're tariff-free. They're inside US borders. They're going to benefit from this unprecedented positive US policy that we see with bipartisan support. And I would really say that for the last 30 years, the US ignored uranium mining ever since the end of the Cold War. And now that whole fuel supply chain truly is being re-domiciled, reshored, re-domesticated. All right, now, in 12 minutes, two different companies and two different ways to play uranium. How many people here, by show of hand, are familiar with the royalty and streaming model in the gold sector? Okay, so I don't have to explain to you why that model works. In the uranium sector, the only company that is focused on uranium royalty and streaming transactions is Uranium Royalty Corp, only company in the world. It was launched in 2018. It's amassed a portfolio of royalty interests, 27 different royalties, and it's got a very strong balance sheet. It has a first mover advantage. It has no debt. And it also has physical uranium ownership of 2.3 million pounds of uranium. So it's got the ability through the royalty portfolio and physical ownership appreciation in that price to see growth. Now, the growth is interesting to point at. In 2026, the revenue projections from the royalty portfolio is a modest $2.2 million. By 2030, over the next few years, you can see the rate of growth in this company. This company's existing portfolio of assets has the potential to generate just under $20 million of revenue in that time frame over the next few years. Now, if you're a mining company, exploration company, you got to invest to generate that kind of revenue. These are royalties that are already fully paid for. So the company has a fully paid for portfolio of royalties that are able to drive this type of revenue growth just over the next few years, and it's poised for growth beyond that as well. Its counterparties include the biggest uranium companies on the planet. It has a very strong portfolio of assets in Canada, including royalty exposure to McArthur River and Cigar Lake, the two largest conventional mines in the world operated by Cameco. A very strong portfolio of assets in the United States. We're very bullish on the US for the reasons I mentioned, and we've got significant exposure to royalties in the US. So near-term exposure, medium-term to long-term, that's what the company's portfolio is really set up to deliver, including on the international basis, exposure to the Langer-Heinrich project, which is Paladin's operating mine in Namibia. So again, to recap, several analysts that cover the company all have buy ratings. Company is debt-free, over $250 million of cash and liquid assets, strong shareholder base. Uranium Energy Corp is the largest shareholder. The next company I'll talk about, where we own just about 15% of the company. 140 million shares out, 143 million fully diluted. Management, including myself as chairman of the board, have very strong equity ownership. I've been a shareholder since 2017. All right. Switching gears to Uranium Energy Corp, and we've got a lot to discuss here with UEC. So UEC is a company that over the last 20 years has developed, grown, and positioned itself as the largest U.S. uranium company, U.S.-based, U.S.-listed. The company is really at the center of various trends and mega trends that we see developing, from the Department of Energy launching the Strategic Uranium Reserve, which we are a supplier of, so we've sold uranium to the DOE, to the trend where the President of the U.S. has signed executive orders to quadruple nuclear energy, to establish a U.S. uranium reserve, and most importantly, the U.S. government ban on Russian imports. U.S. has relied heavily on Russian imports since the end of the Cold War, and this is the other side of that trade, where there's now an effort to really rebuild the domestic supply chain of uranium conversion and enrichment. The Russian uranium ban takes into full effect December 2027. Other big mega trend is the fact that the hyperscalers, the Amazons, the Microsofts, the Metas are investing directly in nuclear generating capacity to meet the energy needs of their data centers. Data center demand and the whole AI revolution that we're in translates to about $3 trillion of investing, according to Morgan Stanley, just over the next 3 years. Every dollar that a customer spends on NVIDIA has a $10 multiplier effect across the NVIDIA ecosystem, which means uranium, copper, anything and everything that goes into standing up data centers to power those chips that are basically supporting and powering your ChatGPT if you use that. We're also a uranium supplier to Bill Gates' TerraPower, that's an SMR company, or Peter Thiel's Radian. These SMR companies could truly change the nuclear energy game moving forward. UEC, again, very quickly, and I encourage you to come to our booth just down the aisle there and talk to us if you have more questions. There's so much to cover. But again, America's largest and fastest growing uranium company, over 500 million pounds of uranium resources across all categories, including our historic resources and the Sweetwater Rio Tinto assets that we acquired. And a company, again, as you saw with Uranium Royalty, debt-free, strong balance sheet of almost $700 million of cash and liquid assets. Two key points: unhedged. Uranium price goes to $200 a pound, goes to $1,000 a pound. We want to capture every bit of that upside. We're unhedged. We're building inventory. Our inventory position is approaching, well, I'll show you that in a second in the next slide, but we should be approaching about 2 million pounds of physical uranium on hand. Licensed capacity in the U.S. is 12 0.1 million pounds across 3 assets. But the hard work is really what we did during the downturn. During the downturn in uranium in 2017, 2018, when the uranium prices were $20 a pound, you can see this graph. It shows you the uranium price, and it shows you all the different acquisitions that we completed during the downturn. During the downturn, we completed over $1 billion of acquisitions in the US and in Canada. And we were positioning the company really for the market that we have right now, where the uranium prices have recovered, policy signals have emerged, market dynamics are all pointing in the same direction. The world needs more uranium. And we couldn't be better positioned with US assets and some Canadian assets to go along with it as well. All right, 4 production growth pillars in the company. South Texas, where we've been historically, that's our Hobson Central Processing Plant. Irigaray, that's in the Powder River Basin of Wyoming. Sweetwater, that's in the Great Divide Basin of Wyoming. And Rough Rider. Now, I mentioned we did $1 billion of acquisitions. These weren't just any acquisitions. These were big boy acquisitions. What do I mean by that? We acquired the North American assets of Rio Tinto, one of the world's largest mining companies. We acquired their US assets and their Canadian assets. We acquired the uranium mining assets of Rosatom. Who is Rosatom? That's the Russian government's nuclear energy company. It's the biggest nuclear company on the planet. These were the assets that these companies held, and we were able to buy at the bottom of the cycle. And so it's one thing to make acquisitions, it's another thing to acquire major company assets, which is what we were able to do. And that's what gives us the combined license capacity from left to right, or I guess for you it'd be, yeah, it is left to right, 12 million pounds, and we see coming out of Rough Rider based on our preliminary economic assessment that was done there. I draw your attention to that infrastructure. Our infrastructure is in place. This is where we're producing uranium. We've delivered in the last couple of quarters some of the lowest, if not lowest cost uranium production in the US, and we're expanding that, and we expect to have similar low cost out of our Canadian assets. But what am I most excited about? Everyone asked me over the last year, Amir, UEC has been so acquisitive. What are you guys going to buy next? And we said, you know what, we own enough mining assets. We've done enough acquisitions in mining. There's only so much incremental value we can get out of mining. But here's the nuclear fuel supply chain. So what does that mean? Before a nuclear reactor can use uranium, that uranium has to be enriched. It's got to be fabricated. That's the right-hand side. But before the uranium that we mine can be enriched, it's got to be converted or refined. You've heard of refining in oil and gas, petroleum refining. Well, that's a big deal in uranium as well. And that's the process in uranium we call conversion. In the entire US, there's only one conversion facility. Can you imagine that? If that one conversion facility goes down, there's no backup. Does the country have one enrichment plant? No, it's got 5. Does it have one uranium mine? Yes, many. But conversion has become a strategic vulnerability. We recognized this 2 years ago. And we decided, instead of only getting bigger in uranium, we want to create the first and only vertically integrated American company that can go end-to-end from uranium mining and processing to refining and conversion of uranium. And that truly creates a strategic value proposition because no one else is positioned that way. In Canada, we have Cameco that does that in Canada. In Europe, we have Orano, the French company. In China and Russia, there's China National Nuclear Corp or the Russian Federation. No American company's done this. And now more than ever, when America is looking for its own supply chains and wants to be in control of its own supply chains of critical minerals, we think this strategy not only differentiates UEC, but creates an enormous business opportunity, which we're going to release a lot more information on in the coming months and quarters to create that true US supply chain solution. All right, on nuclear fuel. So just to wrap up a little bit, Uranium Energy at a glance. Again, most of our companies that you'll come and learn about, whether it's UEC or Uranium Royalty, are debt-free companies with strong balance sheets, with strong insider ownership, and very strong institutional ownership. A lot of analysts that cover us, it's all listed there. All right, to summarize, I got to, again, put context here for you. I've been at this for 20 years. In those 20 years, I've never sold a share in this company and have believed in the value creation that we're going to have when the market turns. While we were waiting for the market to turn, we acquired assets, we put strategies and people and operations together. Now the market has turned. Okay, where is it at? 87. As I mentioned, the uranium price has no business hanging around under $100 per pound. The uranium price should be doing exactly what silver and gold are doing. It will do that, in my opinion, because it is fundamentally in a structural deficit. The world is fundamentally short physical uranium, and every 12 months, it needs more to power those 430 reactors, and 70 more that's under construction, and hundreds more to come. Uranium has finally become strategic. The US views it that way, China views it that way. So you want exposure to uranium in politically stable jurisdictions. Nothing better than US and Canada. That's where the UEC story is so uniquely positioned. 100% unhedged. Production that's in place right now in Wyoming, soon in Texas, and the only vertically integrated uranium company from mining to conversion, all inside the US, and aligned very well with the market conditions. Thank you very much.